Hi, good morning. It's Tuesday the 25th. I'm FX Plu and this is the market brief. So it looks like the government's plan B has been a bit of a win. Data showed that economic activity in January will only be moderately affected by Omicron. The prediction is that plan B will cost less than 1% of GDP. Bravo indeed. The data also confirmed that costs continue to rise at near record levels though. This will indeed reinforce the view that the Bank of England will hike interest rates again when they meet next week. Supply chain pressure might be past the worst. This has helped form the current forecasts that show inflation increasing throughout Q1 before the rate hike action starts to work through and slow price pressure from April onwards. One to keep an eye on. Boris is in the crosshairs for yet another party. The latest accusations were where about 30 staffers celebrated his birthday back in June 2020. I think it's safe to assume that he was there for that one. Boris has adopted a business as usual approach, but pressure for him to resign may very well ramp up when this investigation concludes. The market got off to a pretty lively start to the week as positions were taken ahead of tomorrow's Fed meeting. Sterling fell to a low of 134.40 against the dollar as expectations grew that Powell will get bullish on US inflation. We dropped to about 118.75 against the euro, but recovery from that low puts us around 119.25 at the open this morning. Over in the US, supply chain disruption is still a major factor in the economic recovery. Because vaccination levels have not kept pace with the Omicron version, supply chains have struggled with continued tightness in the labour market. Yesterday's flash estimate of economic activity showed growth fell away and is almost flat. Manufacturing output fell to 55 this month, while services posted only 50.9, down from 57.6, and that means the composite is down to 50.8. The data was far from stellar and no doubt will affect discussions at the Fed meeting, which starts today. Powell will face a bit of a dilemma of the slowdown in the economy just when the market expects him to be a bit more hawkish on inflation. The dollar index rose to a 2-week high yesterday as long positions were taken. We touched a high of 96.10 there as euro dollar dropped away to a low of 112.95 on the day. Right, that's it from me. Join me again tomorrow. All the best.
If you do not have a clue, then just tweet through and ask FX Blue.